Despite inflows, yields aren't going down. Do they need a push? And by a push, I mean growth disappointments.
Well, we are at a rather critical area. It's important. Many of us had thought that we had a series of minor tops here in the 10-year around 41.10 to 41.25. They came up and pressured that again, and that spooked the markets a bit. The fear is if they push above that if they push above that 4,025 area, then we got to have a problem. And relative to the auctions call, the concern isn't about the individual auctions, but the supply. The government, the Treasury is going to have to issue more and more, and that's hopefully not going to crowd things out. That's the fear that we might be crowding out. So we're watching both the bond market testing, and for days now, the S&P has been testing a lot of moving averages between roughly 40 and 45. 35. So the key areas to be watching here.
Yeah, we've definitely been sort of stuck in this range. Overall, 30,000 feet. Art, does this kind of feel like it's par for the course when you've chopped a lot of wood on the inflation front? You're not sure what's going to happen with the earnings or margins on the S&P, and it's August. Does that kind of indecision, does this all seem very familiar to you?
You sound like you're in the watering hole with some of us old timers. It is August, sir, and that does stick out in everybody's mind. In fact, we're moving through the middle, and the middle of August sometimes sees changes. There are certain people looking for cyclical changes that you might be watching for key action on Monday and or Tuesday. Love to be able to tell you exactly which direction, but if I could do that, we'd be both on a yacht somewhere. So, historically, as we move into mid-month, you can possibly get some changes of directions. And the fact that we're testing and retesting both bond yields and the level in the S&P says that if there is a sudden change, if there's a breakout, then it could take the market by surprise, and you could have a big move. You almost saw one the other day when yields went down to 390 and then shot back up above 4, and it looked like that was going to move the markets a bit. They held back. So I think this, from now until next Friday, could be a critical time for both the bond and stock markets.
Yeah, Art, we were saying earlier, just the jumpiness, the uptick in volatility in the Treasury market often does keep the stock market back on its heels. Seems like that's playing out kind of hour to hour. I also wonder, just more broadly, aside from just the calendar, we obviously are into August. We came into this period of the year when everybody first decided to call it a bull market, even after we've been up, 30% off the lows. A lot of the bears sort of capitulated. And right where that sort of even the presidential cycle starts to turn a little bit less friendly for the market. So, I mean, would you be kind of putting that into the mix in terms of handicapping where we go from here?
Yes. Well, I've been doing this a long time, and I will tell you, whenever it looks like the book is over, there's one more chapter, and I think that's what we're seeing. The hedge funds and others were capitulating. You had some longer-term negative observers saying, well, we were wrong or we were off, and things are there. And while that's not usually the kind of capitulation you look for, usually you look for it in high volume and volatility, but sometimes it's collectively people saying, wait a minute, I missed a decimal point here that wasn't quite right. And so I think you're dead right. It looked for a while like the bulls were going to emerge victorious, and now they're saying, well, maybe we'll keep the champagne on ice for a while and see what happens.
Just want to note that things are improving here as we speak. The S&P has gone positive. The Dow is now surging 170 points. So we are recovering from some earlier lows. You've had a number of sectors turn positive, financials, materials, industrials joining some of the more defensive groups. Art, energy still is at the top of the market for the week and for the day. And I do wonder, these oil prices hitting their highs for the year, whether that presents a risk or we should look at it as a good thing because demand is high, as we heard from the IEA today.
Well, I think certainly the energy stocks give it a boost. They've been lacking for a while, but nobody watches more carefully and professionally than you do, my dear, the currencies. And when the energy prices move up along with yields, that tends to move the dollar higher, and that tends to affect foreign earnings and a variety of other things.